Left in the pool of my own mess. When I said I'm gonna change, you made me pick up the broken glass. Don't want it to be in vain, no. But to slow things down and clear my mind, it's like leaving a toxic friend behind. You say yes, and you don't make waves. I don't need to say that you know that I'll try, and I don't wanna hide or waste another life. Say no, and I will let go. I don't need to say that you know that I'll try, and I don't wanna hide or waste another life. Would you believe if I told you that I don't wanna go back? I'm just afraid that I'll lose you, and I don't wanna hide or waste another life. You say
And now, here to help you know your number and grow your number live, the Lossdog Network presents One Lucky Dog with Tom Sosnoff, Scott Sheridan, and a little bit of soul.
Ooh, are you not wearing any pants?
Hola.
Good morning.
Good morning.
How's everyone? Happy Wednesday.
Well, not only happy Wednesday, happy New Year's Eve, happy end to 2025, early happy New Year's, and hopefully a great 2026.
Are you happy for the end of 2025? I am.
Me? Yeah. It was a good year. It was a good year, but I'm ready. I'm ready. It's funny because what difference does a day make? What's the difference between January 3rd and January 4th versus, it's just a mental marker. Please tell me. I'll ask you about resolutions. I'm not asking you. You don't even know what that means.
Right.
What are you going to do differently in 26? I know one thing I'm going to do, not get stuck in some horrible position between Christmas and New Year's. But what are you going to do in 26 differently?
Trading wise or just life wise?
You know what? I want to hear
trading
life-wise.
wise.
No, I want life-wise because trading-wise is too easy for you. Life-wise.
Well, I haven't decided yet because I haven't made my New Year's resolution yet, which will be
Made
later,
when?
later this evening.
You're going to
Really?
make one.
Oh, I always make one. I have my birthday wish,
You have a birthday wish?
yeah.
In 37 years, I never knew that.
Oh, yeah. I would buy extra birthday wishes if they were for sale. Like the old
Okay,
Seinfeld
what's
episode,
your
I would
birthday?
buy.
Give me an example of a past birthday wish.
I can't. It's, I don't know.
They're too private. Oh, boy.
How about a past New Year's resolution that clearly never happened? But let's just hear an example of one.
It's like when the reporter asked Trump, what's
Your favorite psalm or whatever.
your
He's like
favorite Bible
verse. It's too
Bible.
personal.
Yeah, too personal, the whole thing. Yeah. my birthday wish, too personal.
So I don't make resolutions. Do you make resolutions?
I actually do make resolutions.
Do you?
Yeah. But I don't
Yeah.
usually do much on, New Year's Eve anymore.
But it doesn't matter. It's not what you do anything. It's just do
Not
you make a
really.
resolution?
The only one we're doing as a family is we're doing a January cleanse. Like we're no sugar in January
That's the cleanse.
and no alcohol.
No alcohol. A lot of people are doing that. I did that last
Dry
year.
January.
I did that
It's
last
good.
year. Yeah.
But I'm also taking out the sugar. I can't. I've overeaten for
sell,
the holidays.
I'll sell that.
No.
Yeah. I don't know what I'm going to do yet, but I usually, yeah.
Well, good morning. Welcome to One Lucky Dog. Our phone lines are open and ready to take your calls for the next hour.
Let's do
At
it.
989-LOST-DOG. So give us a call, ask any questions, give us your predictions for next year, etc.
So last night I was, I don't know, wide awake at midnight. Don't ask why. And
We won't. Go ahead.
And so I was bored, so I went on our site and I ordered swag. So we have swag now, swag.lossdog.com.
That's right.
And I ordered a bunch of stuff, like coffee mugs and T-shirts and all this stuff. And it took me like 5 minutes. I was very happy. It went smooth as hell.
Where do you have it delivered? Please say you're having it delivered here.
Here,
Good.
Yeah.
here. because I want to.
Because you don't really have a safe.
We're excited. We're going to get like some mugs.
Yeah, I'm excited.
Yeah. They're cute.
Yeah.
It's really cute stuff.
Took me 4 minutes too to play Wordle and Connection.
Oh.
Both of
I
them.
nailed Wordle. I got him 4. I shouldn't say nailed.
Yeah.
Connections, I'm upset with myself because I just.
It's really
made it-
easy. Today's
it
I
was
haven't
easy.
done
Well,
it
they're always
today yet,
easy.
so don't say anything.
They're always easy if you get them.
Well, okay.
That's true.
Right.
That's true.
What's
Sometimes you
the
see
market
it.
doing on December
Sometimes you see it
31st?
so-
So
Sunshine.
market on December 31st, I'm personally surprised. Spoos are down 15. I thought it was going to be a markup today. NASDAQ's down 70. I mean, it's still time. NASDAQ's down 70. Gold's down 34. Silver's down 5 and change. Bitcoin 88,700 to up 450. Ethereum's a little over 3,000, still 3,007 up 35. Shocking news, 10-year and bonds really are not moving. Bonds 115.24. This is literally like stuck in mud. Big movers on the board. You got Meta down 3. You got AMD up $1. You got Microsoft down $1.50. Micron down almost 6. Nvidia up $1.20. That's the big one. VIX up 36 cents. So
So I was trading all night,
you were shopping,
shopping and trading,
doing games, and
shopping,
trading.
playing games.
Go ahead.
And trading.
You sound like a regular middle-aged woman.
A man.
Perfect. I'll take it. Yeah. So I was doing. I was trading the gold silver ratio pairs trade. I was taking that off all night because it's the last day of the year. So this is where we settle all unfinished family business. You know, this is where we settle everything. So I was like cleaning up my positions overnight, covering. I covered S&Ps, covered NASDAQ, covered some short silver, sold out a bunch of long gold, and it moved like
It's moving.
$4 from yesterday afternoon. Just the gold silver ratio moved like $4, which is a big move.
Big move.
And traded that. That's basically it. I guess all those different, but I felt like I was trading all night, and so that felt good.
Glad to hear it.
Because now, now I have to get ready for football starting tonight.
A lot of football.
A lot of football all
If you're
day
not
tomorrow.
a football fan, this can't be a great time of the year for you.
No,
Because that's, I mean,
like
it's
for
just
Seoul,
dom-
for
Yeah,
Seoul right now.
Yeah, like, what do
No,
you
I
do?
watch it. I mean, Andrew watches all sports, so we have sports, if anything, on TV for sure. Yeah.
Well, I'm cooking at Katz's Pastrami tomorrow, and
Nice.
Yum.
and making Reuben sandwiches and watching football all day. So that's my game plan.
Beautiful.
All right, let's see what we got here.
Yes, let's
Welcome
go to
to
our
Lossdog. I'm
letters.
Tom Sosnoff. He's Scott Sheridan, and she's Soul.
That's right. Just so. We're good. All right, let's go to our letters.
Our phone lines are open, by the way. We want this to be a very aggressive call-in show. You can ask questions about anything. So ask me anything, ask us anything. Go ahead.
All right. Would you consider giving capital to a CTA, commodity trading advisor, as a reasonable strategic diversification? My wealth manager is strongly suggesting that I place a small amount, 5 or 10%, of my capital with the CTA they endorse. What do you think?
Oof. Well, I'll start with you have a wealth manager. So if you have a wealth manager and they're recommending some diversification going with a commodity trading advisor for 5 or 10%, I'd give it a whirl, but I would keep a short leash on the advisor.
My experience with CTAs, which are different than RIAs, just because of the products they trade, it's pretty mixed. I actually don't think that the industry of CTAs is very successful, and this is not something that I would do. This is very classic for wealth managers at large financial institutions to recommend strategic diversification using like either an in-house or a fan-friendly CTA, because the fees are gigantic in those. They usually get, up to 7% for raising capital and another 1 or 2% for managing those positions. I don't care what the track record is. I don't think in this day and age you should have a manager that is specifically just stocks, just options, or just futures. I think that if the manager's not doing everything in a single account, then it's not really of any interest to me. And I don't even know that many CTAs that are still around that are only commodities.
Yeah.
And I also don't think that track record for any of those guys or any of those firms is very good. And they're just taking shots with your money, paying a lot of high fees. I would say this would be a no to me.
Yep.
Okay.
All right, let's move on to the next one. Okay, I heard someone discuss his top 3 investment ideas for 2026. They were Bitcoin, baseball cards, and fossils. Is that type of info interesting to you? And how would someone invest in fossils anyway?
I mean, let's just back up to baseball cards. So I had somebody pitch me on this. It was a fund that somebody was putting together to buy baseball cards. And I said, for what reason? And they said, because they only go up in value. And I just went like this. I'm like, oh my God. So we're now looking for other asset classes. Listen.
Well, you could digitize it. Now, you could digitize a fund for baseball cards. I mean,
you could digitize anything.
Right,
I mean,
right,
we
I
had
understand.
somebody that was
Yes.
here yesterday, an old friend of ours.
tokenize
Yes.
it, whatever, yeah.
An old friend of ours was here yesterday. He lives in Singapore. He was in visiting. And I asked what he was doing. He was in the trading business. He's moved on. He now has started a fund with somebody else that they are buying really expensive casks of old scotch.
Vintage scotch.
And they're selling fractions of it. And when they're aging them another 5, 10 years, whatever it is, and when the time comes up, you can either have your bottle or bottles, or you could sell it at auction and take the profit. I said, okay, what do you take on that? He's like, about 20%. So, listen, people are looking for things to do and to trade, and we're going to see a lot more of this. Fossils, I have absolutely no idea. But again, like whiskey or scotch, how do you know? To me, because, well, I don't know, maybe it is heavily regulated. Baseball cards are not. I think there's a lot of frauds in this stuff. So I'd be very careful. Bitcoin, obviously, very different. but the alternative asset space, which I think is going to explode starting in 26 and on, we're going to start to see.
It already has exploded over the last 15 years.
But I think what you're going to start to see is it will be in your brokerage account. You will be able
yeah.
to do things in your brokerage account starting, I
soon?
think, this year.
Tokenized.
2026?
They have to be
Tokenized.
tokenized.
Yes.
It's all going to be tokenized.
Yeah.
Here's the thing. So the last one, investing in a CTA with 5 or 10% of your money, I have no interest in that.
Fossils?
However, fossils.
However, Bitcoin, baseball cards, and fossils would be way more interesting to me. Not 5 or 10%, but 1 or 2%. And I'll tell you why.
But baseball
First of all,
cards?
if it's managed like professionally, yeah, sure. Here's the thing with fossils. So they've recently become very popular because
Fossils?
because
I was just at the Field Museum. I saw Sue. Very impressive.
so Joe Burrow, who's a
fossil.
quarterback for the Bengals, and a really good one.
Really good one.
Decided that, quarterbacks always gift their offensive linemen, the guys that
A
protect
car.
them, they usually give them like a golf cart or a Rolex watch,
watch,
whatever.
At the end of the season?
Okay.
Yeah.
So
Oh,
Joe,
really? I did not know this.
They're protecting them.
yeah, they're
Well,
protecting them all year.
obviously.
And the quarterbacks make $55 million. The offensive linemen make $5 million. So they give them whatever.
No tag days at $5 million, but go ahead.
But whatever. So Joe Burrow this year gave his offensive lineman fossils.
Fossils.
And because he happens to be, and he took them to the Field Museum, his entire offensive line, when they came to Chicago.
Oh, here.
Really?
Yeah. So Joe Burrow happens to be like a fossil freak. And when I was reading that, I'm like, oh, that's kind of neat. I didn't even know there was a market for fossils. So I Googled it, and there is this crazy, like, underground market for fossils.
I'm going
And
to guess it's not a tight market.
it's not a tight market, and you have to know what you're doing, and there's lots of fraud. But for, I guess for certain people and certain things, it has been a really good investment. All I would say is that the asymmetric upside of baseball cards, Bitcoin, and fossils, to me, is better than
Somebody trading silver.
somebody trading silver and gold with just taking shots with your money. So I would prefer that second one than the first one.
Okay.
Yeah, don't be shy. Queue them up.
Great.
989
989 Lost Dog. All right, here's up next. With your new platform, in an ideal world, I would input all relevant information and receive a clear estimate of what I am worth to an employer. What happens when potential employers either don't understand or don't value certain aspects of that analysis, and instead have a fixed number in mind they're willing to pay, especially if there are other candidates willing to accept that number? How useful is the ideal valuation if market reality doesn't align with it?
Good question.
Good question.
So I'll jump in here, and my answer to that, first of all, it's a very good question, and you can only control what you can control.
You get loyalty points for good questions.
Yeah, there are things that are out of your control that there's nothing you can do about. This would be an example of that. You could run into a business that just says, here's what we're paying. We don't care what you think you're worth. This is all it is. You could run into a business where you're saying, great, you want a little bit more. We have somebody who's willing to take a little less. That's a market. That's a real market. You just look at this, at the board right now for the stock market. There's a reason prices go up and down because you have people wanting to buy, you have people wanting to sell. Real, pure, true market. So this is not what our number is hopefully going to give you is information. It's going to empower you to go in and hopefully be able to make a logical, rational argument as to why you're worth a certain number. It does not guarantee that the company is going to say, oh, didn't know about Lost Dog, let me see it. Okay, fine, this is what we're going to pay you. But hopefully you'll be able to convince them to either come to your number or get somewhere closer than if they're offering you something below that.
Yeah, I mean, that's the answer.
Yeah.
I mean, the coolest thing about the Lost Dog technology, when you guys see it, is just that we give you context where nobody's ever given anybody context around, valuations before, personal valuations. Of course, the employer, who knows what they're who knows how much of it you can use, but just knowing more about yourself than you knew before
Has to be better.
Has to have some value.
It has to be better.
Yeah.
No guarantees,
Right.
but it just has to be better.
Yeah, I mean, you'd rather know than not know, and that's the approach that we're taking.
Great. All right, let's move on to the next. I believe in 2026, the AI bubble will burst. Is there a way to play that assumption other than buying puts outright?
Well, the answer, first of all, I agree with you. Second of all,
Timing is everything.
When?
Timing is everything. My preference, and again, this does come down to a buying power / margin issue, because obviously if you buy a put, it just costs you that amount of money, so it depends on how much money you have in your account. My preference is I would prefer to sell upside calls. Now, upside calls obviously are limited as to what I can make with them, but my feeling is I'd rather go out, to a 15, 20, 25 delta call and sell some of those rather than buying a put. The good news about buying a put, obviously, is if you're right and they do implode, your downside isn't capped. Obviously, the stock can't go below zero. The risk of of my approach is that if I'm wrong, if you're wrong and you buy a put, you can only lose that. If I'm wrong, obviously, I could be in trouble on the upside. But my preference would be to sell call, naked call, or call spreads.
Here's the crazy thing about AI. The AI bubble, when we refer to AI bubble, I think we're just talking about stock prices.
Yeah.
We're just talking about price. We're
Stock
talking
price.
about valuations.
Not AI going away.
Yeah, right. AI is going nowhere.
AI is here to stay.
Yeah, right. And this is more. We're just talking valuations, and we're talking about multi-trillion dollar companies potentially being losing $1 trillion in value, which
Think
sounds
about that we're saying.
Yeah, right.
Just think about that. Like if you go back, we talked about this. What IBM was worth, in the 70s or 80s.
No,
like
I
50
get
billion,
it.
right?
Yeah. I mean,
losing $1 trillion.
The thing with AI is that's very different than the internet in 2000, 2001, is that when the internet bubble burst, a lot of these companies, they didn't have the money. They built the foundation of what we use today,
Yep.
but they didn't have the foundational capital to survive. The difference in the AI world is that these companies, they're just loaded with cash.
Most of them.
Most of them.
There will be some.
Of course, there'll be casualties, but
Yes,
there's
most
always
of them have
casualties.
enough. OpenAI is not going out of business.
None of these,
Right.
none of the major players are going out of business. Whereas
None of
in
the big 7?
none of
No.
the big 20.
None
Yeah.
of them.
You know, but if you go back to 2000, 2001, virtually every one of the like, I think 18 of the top 20 companies, you know, they got annihilated. And the NASDAQ went down, you know, 80%, plus 80%. So yeah, I believe the AI bubble probably valuation-wise will burst. Is there a way to play that assumption other than buying puts outright? You know, the whole challenge in these stocks, because I've been getting short AI stocks now for probably going on 3 years. And it hasn't worked. And I'd like to have all that money back, please. So how do you play it? Because, you know, in the world of options, and there's no really AI futures, in the world of options and stocks, you know, everything is timing.
Everything's timing.
And it's expensive to be short these stocks. It has not worked.
But that's why, to me, selling premium, NVIDIA, I was short it, I mean, not constantly, but off and on. I only traded from the short side the entire year, and it was my best symbol.
Well,
Because
then-
just selling upside calls.
Well, I was short NVIDIA for the last couple of years, and it's been my worst trade. So it's just timing.
Timing.
Yeah.
Yeah.
I mean, I'm going to go with Scott here on this one and say that my preference would be to sell upside calls, but it's not an easy trade.
It's not.
It's not an easy
It's
trade.
not for the faint of heart.
Go as far out of the money as you can, and close your eyes. If you can do a self-induced coma, like that's usually the best way to trade.
The self-induced coma originated with Google.
Self-induced coma.
Yeah, when we were long, when they printed, whatever, over 180.
Well, that was the old. That's the old Fidelity strategy and everybody else. And, you know, basically.
Oh, by the way, speaking of self-induced coma and Fidelity strategy, today's Warren Buffett's last day. Okay, let's move on. Okay.
Today's Warren Buffett's last day.
Yeah, he's retiring
Yeah.
today. Today's his last day, almost 6 decades. That's a goat. That's a
I
goat.
like him.
I mean, whether you like him
I
or
mean,
not.
what's not to like?
Yeah, I mean, that's,
I know.
listen, he did something.
I was not a Charlie Munger fan, to be fair. He used to piss me off because he would just rip on options and
Yeah.
futures traders, and he would
Yeah.
just rip on active traders. And I'm like, dude, shut the fuck up. You know, I mean, Charlie Munger, you know, I mean, you're a billionaire, you're 100 years old, just shut up. And because you just rip on our business nonstop.
Yeah, I get it.
While the back end of it would be those guys were selling, you know, a crap load of puts and probably calls as well.
Well, speaking of futures, I'm trying to learn more about trading futures. I can't find any place where they list when futures contracts expire. Can you explain how futures settle?
Nobody can.
Nobody can. That's the easiest
Pete
answer.
Molnat.
But I will.
There's
Pete,
one person in the whole world.
I will tell you, go to, whether, I don't know if you're a Tasty Trade customer or not, but if you go to the Tasty Trade website, go to the help section and type in CME or type in CME futures, something like that. They have a great multiple help articles, and there's links that will take you to each product. It's separated by category, so you can look at financials, metals, ags, etc. It is so confusing. You need basically a PhD.
So it's funny, this person wrote me this email, and they said, essentially I just shortened a little bit, but I forgot what future they were trading, but they were like, I'm taking I'm reading up about futures and I'm putting on my first position, but I don't understand when there's an extra, how it expires.
Well, their firm is going to get you out. They're going to shut
but
down
hold
the
on,
rollover.
Yeah, but that's something you want to do, rely on the firm. So I wrote back and I said, the craziest thing about trading futures that differs from trading stocks or options is that, and this is the only difference about trading futures, is that futures are not standardized. Every other product is standardized.
It's so confusing.
And every other product's decimalized and standardized, and futures are not. And it has been a pet peeve of ours for decades, getting the CME. I mean, we've had this discussion with their CEO, with all their product committees, and over the years we're like, standardize your damn products. make this thing.
But the reason being is that they were created for a hedge.
I understand.
So, but they weren't created for retail.
I
They
understand,
should
but now
modify.
they're retail.
Yes,
Right.
they should modify the approach.
They
and
should standardize
won't.
everything. When we built the small exchange, which was our first exchange, the first thing we did was standardize all the contracts. Because we're like, there shouldn't be every single
This shouldn't be a question.
This should not be a question.
Right. It's an excellent question.
So
and
the
it's
answer-
a valid question, but it shouldn't be a
The
question.
answer to this question is that every single future has a different settlement. Here's what I can tell you about future settlements. A, they do not, and I'm going to qualify this, but futures do not settle into cash. Just so we're clear about this. And except for the index futures that settle on a quarterly basis. That's it. So index futures settle on a quarterly basis into cash, and everything else,
Settles to physical.
Godspeed.
And, well, you can't. Your firm is not going to let you do it. So they're going to cause you to either close or roll.
Yeah, your firm will
Cause you to close or roll before you wind up getting hit. There is no early assignment. So if you're you're not at risk if you're trading it like you are with an equity option where you could have early assignment. That can't happen with a future, but at the same time, your firm's not going to let you take it. But again, go to tastytrade, go in the help section, great stuff about it. It will take you to, it'll tell you the trading hours, it'll tell you settlement, it will tell you margin.
But a lot of people don't have Tasty accounts, so
you don't need a Tasty account. It's free. Just go to the website. You don't need to have a Tasty account. I'm just saying, if you go to the website, the help article, it's on the free side. You don't have to log in.
We're going to go to Devin in Hershey, Pennsylvania. Devin, what's up, man?
Hey, what's up,
Devin.
guys? How you doing?
Hey, we're good.
How you doing? How are you?
So, I want to kind of give you my point of view on the whole Lossdog software. So,
Sure.
I was a chef for a long time. I moved to Pittsburgh when I was a kid.
Okay.
Worked under a bunch of chefs, opened up a bunch of restaurants. I acquired recipes, knowledge on how to run kitchens, made myself very valuable, worked my way up through. Then I moved back to my hometown of Hershey and started applying for jobs as an executive chef in the area. So the pay from Pittsburgh to the area that I live in Hershey was drastically different. Chefs get paid a lot less. Their restaurants just aren't as busy.
Sure.
It's just based off of population. So what I did was I tried to put together some research based off of my experience. And I took this with me when I went to interviews. And I later found out that I was viewed as basically being a smartass for doing this. Every employer everybody who owns restaurants, they have a fixed price. Like
Okay.
the restaurant industry has very little margins. Like the profit margins are terrible.
Right. Agreed.
So I got in situations where I did get a chance to be an executive chef, and
Yeah.
I was there for 5 years. And they were like, what we're going to do is, we hear you, we think you're a great chef, we think you're good. We're going to pay you this amount, put you on a probationary period for 90 days,
Sure.
and then we're going to revisit the salary. It never happened. I mean, I steadily, every week, controlled the food cost, took inventory of my products to give an accurate food cost. I was showing them every week in our meetings that I was making them money. And it just, after 5 years, I was like, these people I'm never going to get a raise.
Yeah. I mean,
And
unfortunately,
It's a tough space.
that's a tough, the restaurant business, and again, we have very little experience, right?
Other than eating.
We did own a restaurant one time, but
Yeah.
I guess I've told the story. We were selling more heroin out of it than we were
Not us.
food. Not us personally.
again.
No, yeah.
And,
That's how
and we
it is.
do. We own a coffee shop now, which it's
So my-
a beautiful place, but doesn't make any money.
My takeaway from
Yeah.
this would be a couple things. One, totally hear you. So if there's a possibility for you or somebody else that's in this situation to move, to leave the town that they're in, to go to an area that potentially has a more competitive market, hopefully that would be a good move. But the other side is, I think it shouldn't have taken 5 years to realize they weren't going to give you something. So shame on them for telling you that they were going to review and take you out of probation period and give you a raise. So shame on them for not doing it.
Go ahead,
They
Devin.
bought a brewery in the midst, So
Yeah.
that was one of their, oh, we weren't expecting to do this, and it kind of stretched us. So could
Yeah,
you
yeah,
just
that's
like
what
stick
happens,
along?
yeah.
And yeah.
Listen, sometimes
I mean-
sometimes based on where you want to live, that's, the best example I can give you is my own sister. She was a prosecutor, went to Northwestern Law School, super smart, decided she didn't want to be part of the rat race in the city, moved to rural Maine, and, was attorney general for the state of Maine. But in the state of Maine, they pay the governor $80,000 and they pay their top attorney $60,000. So
60 grand.
60 grand.
Wow.
I feel like that's what we pay one day to a litigator in Chicago.
Yeah.
We'll get a bill. Oh, we
Right.
talked on the phone for an hour, 25 grand. So,
Yeah.
dude, it's where you live, and we, I hear you, but we know that giving people context is helpful, and that's what Lossdog's all about. Hey, Devin, we got a bunch of people on
Yeah.
hold, but so thanks so much for
Thanks,
calling
Paul.
in. And
Happy New Year.
Don't be shy. Happy New Year. Call in a bunch next year. We
right.
want to hear more of your
I'll
story.
call in.
Thank you.
Hey, we're going to jump to Brett in Wyoming. Hey, Brett, what's up, man?
Hey guys,
Hey, how are you?
good. Thanks for taking my call again. I called yesterday as well.
All right.
Say, yeah, I thought I'd see if I could put both you guys on the spot a little bit, maybe here.
Go ahead.
I would like to know from both Scott and Tom, if you guys had to pick one options trade, what would you go with? If you just had one choice.
You mean
one
strategy?
A strategy or a symbol?
One strategy. Which one would you go with?
Well, again, it's dependent on the market. Where we are right now, which is effectively all-time highs, I'm going to go back to the last message we were talking about for AI. I'm a seller of upside calls. And that's my strategy.
I would sell both sides. I'd sell strangles, wide strangles. That's my go-to. I would say in 2025, I probably traded more, out of, I think I made 15,000 trades. At 15,000
That's a lot of
trades,
trades.
I know, but at 15,000 trades, I would say that the single strategy I used the most was a short strangle.
Again,
And did you have a
requires
particular? Did you have a particular ticker you would?
No,
like
I don't
to
have a
go with
particular ticker.
mostly?
I'm indifferent. I take a very agnostic approach to tickers. I don't really care.
just looking for liquidity.
Just liquidity and
And
volatility.
moves. Yep, liquidity and moves.
Yeah, liquidity and moves. I mean, I never thought I would end 2025 with my biggest position being in silver. That's for sure. And, over the course of the year, you trade stuff that you're like, I can't believe how much, bonds I traded this year. I can't believe how much Japanese yen I traded, and I can't believe how little Apple I traded this year. So, you just never know.
Okay, you just kind of go with
You go with whatever is
happening
liquid,
at the time.
whatever's in play.
And
Yeah.
the nice thing about the markets is that they move.
Yeah.
So don't fall in love with something and just say, I can only trade this particular symbol or these 2 or 3 symbols. Watch for what's moving, because the movement obviously gives you certain opportunities, but then also liquidity. So there's certain stocks, like I talk about, I'm looking at one right now, Reddit. Huge moves in Reddit, horrible stock to trade because the liquidity. It's just brutal. The markets are brutal, but it moves. So versus you take Nvidia, it was moving, but great liquidity. So, and obviously the indices, SPY, Qs, SPX, that stuff's all, all really good. Amazon, pretty good. Google. So there's plenty of stuff out there. Just keep your eye. That's one of the reasons that we say watch the markets, even if you're not trading them. Just watch the markets, because then you see what's going on, and hopefully it triggers something, gives you an idea.
Hey, Brett, we're going to jump, man. We got a bunch of other people on hold, so we're going to just jump and grab some others, okay?
Happy New Year.
Happy New Year.
Happy New
Thank you
Year.
guys. Thank you much.
Thanks so much. Talk to you next year. And, and Steven from Miami. Hey, Steve, what's going on?
Hey guys, how are you?
Hey, we're good.
I was listening a few days ago. This is not the most poignant thing in the world, but it sounds like a discussion show. And I was listening to a segment you did about a week or so ago. I only listened to it once, but it was about why people don't have any money. They're not either getting paid enough. They can't save for this, that, or the other thing. Do you remember
Yeah, sure.
to what I'm referring?
Sure.
Okay. So as I was listening to it, I was thinking, I'm 62 now, so I've lived in different cities. I've also lived rurally in Vermont. I used to be Steve in Vermont. Now I'm Steve in Miami. And so I've been in different places, and I've lived in my life, going back to childhood, like a middle class and a lower class and a higher middle class. So I've seen things from different angles. And I've always wondered, because for me, it was like a challenge to save money and invest it. You know, back in the day where it was just like you buy and hold stocks and stuff, I started at a young age. And that to me was fun if I invested or I got like a bonus or something. But so many people I've always noticed, because I've had a lot of friends that had been in debt in Chapter 11 and all that, they don't know how to save money. It's not taught. It's not part of our culture, as if people were told to just save money, that it would hurt the economy because they're not going to Starbucks anymore. Like, you know, God forbid, it's like, hey, I could make good coffee at home. I'm not saying everybody has to. But if you are intent on trying to save money, I travel. I see people in restaurants all the time, bars, people buy their lunch. They don't like make it at home. And I'm just wondering the thought about that in the discussion of why people don't have money. Now, I'm not blaming people to say that, you know, I don't want to say that people sometimes don't get paid what they're worth. That's kind of a different thing,
sure.
or inflation doesn't eat away, or, you know. But just the skills of like, hey, you don't have to just buy everything all the time.
I know, but this is a cultural thing. And in the U.S., okay, we are spenders, not savers. This is one of the worst saver countries in the world, of the highly developed countries. When you go look around the rest of the world and you look at Japan and most European countries, people, or Asian countries, everybody's a saver everywhere around the world. And if you look in the U.S., everybody's a spender. Now, the argument to support the spender mentality is that we have pretty much the largest economy, the largest GDP, for the smallest amount of people, the largest GDP. And it's a situation that for us, it's kept us, you know, as pretty much the leading center of liquidity and the strongest economy in the world, and it's where everybody, you know, comes to raise capital, and it's basically we're a giant pool of liquidity, and the reason for that is because you know, we have an economy that doesn't save.
I agree with that, but I agree. I'm going to say to Stephen, I've had this conversation. My oldest has asked me multiple times why I think that our educational system doesn't teach basic stuff. Like, we don't talk about any type of financial, you know, understanding now. We don't teach it. I mean, unless you specifically go to school and you're learning finance, but I'm not talking about that. You're talking about just basic stuff. How to balance a checkbook, although nobody has a checkbook anymore.
See, I don't agree with you on that.
Why can't we just teach some basic things about
basic
money, just money, simple money management?
Financial
The concept of financial literacy is very misunderstood. And if we spend time teaching about savings and, in the old days, balancing your checkbook and credit card debt and stuff like that, I think we're not doing anybody any favors. I think it's actually a mistake. I think that if you want to teach about financial literacy, you have to challenge people intellectually about that and not dumb it down to like, okay, here's how you open up a savings.
But the concept is teaching.
Correct. I didn't say
You're
you have to
talking
dumb it
about
down.
curriculum. We're talking about teaching it in the first place.
That's
like
right.
actually
I'm
teaching
talking
it to
about-
little kids financial literacy, which could be investing in everything. But nobody teaches it.
My definition of financial literacy is different than everybody else's. That's all I'm saying.
Okay.
Okay.
Hey,
Stephen,
Stephen.
reasonable question.
Yeah, go ahead.
Let me jump in here. All right, so there's a balance in there. But Tom, going back to what you started with, though, then maybe we need to stop complaining about the fact that Americans don't save and that people don't have money and they can't save enough to put it
You'll
down
never hear me
payment.
complain about that. I will never give you the
but I hear
dumbass.
people all the time.
If you give me like the Susie Orman argument, like nobody has enough money to last, 30 or 60 days or 90 days, whatever it is, I don't like that discussion, because that changes the narrative over what finance is and what financial literacy is and what investing is. You know, like I don't like to make excuses for stupid. And I think that's what people do.
But stupid comes from not having the education.
That's right.
Yeah,
It's ignorance.
correct. That's correct too. I used to be an educator. You know,
It's not a question of
if you
not,
don't
here's
know,
the thing.
you don't know.
It's not about not having the education. It's that the education is set up in the wrong way. Education is set up to teach financial literacy in a traditional sense, which makes no
But
sense.
no, it isn't.
It is, and that's why.
Well,
And that's
you
why.
have to adapt, Tom. You have to adapt.
I agree, you have to
That's not
adapt,
an
yeah.
argument.
Yeah, I agree, you
You
have to
create the good education. That's all. But
Right.
once
Try
you
to
have the
change your
education-
curriculum, Stephen. Try to change
No,
your
no, no,
curriculum
no, no,
somewhere.
But what we're
I
saying
know,
is there
it's
is
up to
no
the parent.
curriculum.
I mean-
Because it really isn't taught.
The challenge is trying to change curriculum anywhere. Like if you talk to, there's a reason, you know, over the last 25 years, we've done, I don't know, countless universities and colleges and worked with a crazy number of professors. And just getting a school to, you know, accept a different version of financial literacy is next to impossible.
You mean college?
I think we're
Yeah.
getting off
Level?
track, though, from the main.
Sure.
I think we're getting off track.
No, I know,
The
you
point
started with the
is-
saver. I understand, I get it.
Yeah.
But we're
And
not a
there's people
saver.
who are suffering that don't have money because they don't know how to save money, and we don't encourage people to say, hey, you don't always, even though there's a benefit to the overall economy, like you said,
Yeah.
there's a lot of people who are suffering simply because they don't know, which I guess brings it back to education. But,
All right.
Correct.
Correct.
you know,
Correct.
I agree with you.
I agree.
Yeah, I mean, I have a slightly different view, but listen, Steven, it's good to, are you the guy that brought the maple syrup to us?
I'd love to say yes, no.
Oh, okay.
I'm the
It was a
vocal
different,
guy,
it was a
but,
different Steven from Vermont a couple of years ago. I couldn't remember.
You know, I think you asked me that once before when I.
Did I ask you? Okay.
when I
Now you're
called in
Steven
here.
from Miami.
Hey, man, take care, Steven.
Thanks,
We'll
dude.
talk,
Happy
we'll talk
New
to you
Year.
next year.
Happy New Year.
Okay. Bye-bye. Happy New Year.
Fun group of calls. We've got a lot. We got a couple lines open right now. 989 Lost Dog. So don't be shy. All
That
right.
just rolls off your tongue. I like that.
Yeah. It's a good
I'm
one.
Tom. He's Scott. She's Soul, and we've got a bunch of stuff. We go back to the dog pound for a little bit, and again, I was talking before because somebody asked swag.lostdog.com if you want to buy any of our stuff. And by the way, we don't mark it up, so it's basically a
It's
cost.
really a cost.
Yeah, so
Yeah.
you should check it out because the prices are crazy cheap. And if you haven't joined our wait list yet, please, lostdog.com, join our wait list. Our stuff is coming out very soon, our software.
That's right. Okay, so when you're building a new business and you know your burn, how much capital should you have in reserve? What is the minimum number of months worth of funds to give yourself a decent chance of survival?
So
Rather.
I'll jump in here. I said, obviously, there is no set number here because it depends on what the business is, what you're trying to do.
Yeah.
But as a rule of thumb, whatever you think your runway is and whatever you think the amount of money is, double it.
At least.
At least. That's just as a rule of thumb, double it, and you'll be happy that you did because we don't know what we don't know. None of us do. So you think you have an idea about where you're going and what it is, and you're going to go, wow, didn't realize I had this. So again, rule of thumb, double it. If you could triple it or more, great. But it depends on the business from a timing perspective. So
I never forget how naive we were when we first, I mean, even though we both worked for ourselves for a long time, when we left the trading floor and started to build Thinkorswim, I was really naive about how much capital we would need. And I remember negotiating a deal with a development firm at the time and thinking, you know, once we build this software, we're pretty much done. You know, I can scale the whole business and do all this.
Yeah.
What I didn't know is that about $100 million later, you know, like every year, the number kept going up to some insane number. So, you know, and that hasn't stopped for 25 years. Scott's right. The you know, whatever you think it is, it's going to be a ton more. It's almost like if you've ever built a house or an addition to a house, you know, you think, oh, I can do this for X, and then
Yeah.
it costs about 10X.
right. And then
Never
a few
happens.
X's later, you're like, I can't do it for X.
Yeah, we had to add, building this set that you're looking at behind us, we probably added an extra comma to get that thing, you know, from what we originally thought this would cost to what it actually costs. I think what's important, the minimum number of months, you have to give yourself, to be fair, you have to give yourself over a year. I would say 18 months to 24 months is a minimum.
Yeah,
Okay.
assuming you have the capital to do it, but I think that that's reasonable.
Most people that don't make it, they're undercapitalized, but they also, they front end load a lot of their burn, and so you got to be really careful about that. Just be cheap up front.
Well, I don't think it's being cheap. It's being cautious. It's one of the things that we
Right.
did really, really well with Thinkorswim when we first launched.
We didn't pay ourselves.
We did pay ourselves. And this is a period where if you went back and looked at the dot-com bubble, a lot of reasons these companies didn't make it was because they were taking huge salaries. They're like, oh, they thought there was a spigot. You just turned it on and cash came out. We knew we had a finite amount of money and said, we've got to make this work. And for us, we said, look, we were fortunate. We had trading business, but we took it on the back end. So we took equity and said, look, we're not going to pay ourselves, which we didn't. And we said, let's just kill ourselves, see what we can do, and it worked. So be careful. The burn is critical. Keep it as low as possible.
And let everybody know that.
Yeah.
It's a startup. That's you keep your burn low. You don't pay. You pay yourself if you need whatever you need to survive, and that's it. And you're betting on the come. You're betting on the it's
And
a
again,
long play.
that's a hockey stick. So whatever you're paying yourself, it's going to do this. If you're betting on yourself with equity, hopefully you get that. And that's really what you're hoping for. The salary will be irrelevant so long as it's meeting your needs.
Right.
There you go.
There you go. We have questions from the dog pound. Would you like to take one?
Well,
It's from the chat.
Let's do it.
Okay, what is it?
So this person says, Tom, what would you add to a financial literacy curriculum that is typically missing? Since you're talking about it so much, you might as well explain.
So
Good question.
this is not a when my kids were in high school, I talked to the school and tried to get them to even just touch on like investing, but
I'm laughing because my kids went to the same school.
it never happened.
They weren't interested.
They weren't interested. They actually, here's a crazy story. So I thought I was making progress. This is a high school, and I thought I was making progress, and then on the last day, the person I was talking to, working with, said, listen, we've talked about it, and we really like your ideas about, a course on investing and kind of more advanced finance. And they said, but it costs a lot of money to change the curriculum. So if you write a check for $1 million, we'll do it. And I'm like,
Long story short, didn't happen.
long story short, it didn't happen. Throughout the years, though, we have at different universities around the country, we have introduced a bunch of trading programs and what I call complex strategic financial literacy, which is a completely different approach. And and we've also been on the forefront of entrepreneurship programs and things like that, and done a gazillion talks all around. And I think that if it was up to me, financial literacy at a university level would be strategy. It would be a lot of math models. It would be a lot of what's kind of how the sausage is made in listed financial markets. It would be a lot about business and entrepreneurship. But essentially in the finance world, it would be very strategic. I just don't think people understand how efficient markets are. And I would base everything kind of around, efficient market theory and positive drift.
Okay.
I mean, there are some schools that do it, but it's not enough.
Yeah.
I mean, we have some amazing professors that have been, customers of ours, and we've collaborated with them, and they're just incredible. But
That's right.
they're all one-offs.
Yeah, well, people who have been able to create
Yeah.
their own curriculum.
Yeah, like a one-off at Georgetown, a one-off at Yale, a one-off at University of Bridgeport, a one-off at University of Idaho,
That's
one-off
true.
at Penn
Yeah.
State, Pittsburgh.
Outliers, essentially.
Yeah, Florida Atlantic. I mean, I'm just going through colleges, University of South Carolina, Vanderbilt. I mean, just all these schools, Notre Dame,
Yeah.
Illinois. I mean, these schools have professors that are all into this stuff, but they're all kind of, one-offers.
Yeah. So speaking of how the sausage is made, people are asking, what's the secret to a great Reuben sandwich? And the question is specifically for Tom.
It's It's the pastrami.
It's the pastrami.
I mean, in Chicago, we do have a few problems.
What about the mustard?
In Chicago, we have some problems
Thousand
with
Island.
rye
Oh,
bread.
Thousand Island.
Thousand
Oh,
Island.
right, for Reuben.
Yeah, we have some problems with
Yum.
rye bread in Chicago.
Bagel.
But the reality is that it's all about the pastrami, and it's hard to get. That's a
I will tell you,
I know you like Green
But if
Street.
you-
Green
had to
Street
get it in
is
Chicago.
Green Street is
okay.
great pastrami.
Right.
It really is.
It
It's
is.
not Katz's.
I know it's good.
It's great.
Not
Mike from
Katz's.
Westchester, and that's Westchester, Pennsylvania.
That's
Hey,
right, Mike from Westchester.
Westchester. I
Yeah.
grew up in Westchester,
words.
but a different Westchester.
Remember?
Yours was one word.
Yeah.
Mike, what up, man?
As he reminds us.
So I want to have a little fun and try to stump you. I'm not sure.
Okay,
Is
stump.
that okay?
Yeah, sure.
All right. It's going to be a Jeopardy format. So
Oh God.
many people believe that Vanetta Logan, comedian, sang the Tasty Trade theme song, but it was actually this woman who was never credited.
Well, Tom knows the answer to that. I know.
That is true. It was not. She did not sing it. It was a woman that we hired.
Indonesian?
What?
Indonesian? Filipino? What was
Yeah,
she?
she's Filipino.
Filipino.
Are you asking me her name?
Yeah.
I don't even barely know my kids' names. I mean,
Anyway,
what are you, crazy? This was 15, 16 years ago. You're asking me about a random woman that sang a song for us. What's wrong with you, Mike?
well, okay,
You should know
well,
better.
Here's the key.
What's the key?
Here's the key. I was just having fun, like Jeopardy style. Okay, the words to this. Who wrote these words? Throw that coffee down your throat hole. Now you got a hole in your
Oh,
throat.
one of the women that worked for us, she wrote it, and at the time, she hasn't worked with us for probably the last. She probably left, 4 or 5 years after we started, but it was one of our comedians who was also a songwriter.
Anyway, yeah, her name's Mary Sohn, S-O-H-N.
Yeah, you're right, Mary Song. That's
All right.
right. Yeah. God, you
Yeah,
know more,
there's two more.
better tasty trivia than I know. Okay.
Yeah, there's two more, but
Go ahead,
just
what do you
one
got?
more fun question.
Okay.
Did you ever get a cease and desist from Jim Cramer? For
No,
calling him Jim
We've
Blaine?
had cease and desist.
No. In fact,
Not from him.
no. In fact, we used to run those Kramer ads, and I talked to Jim, after we ran those ads, because we know each other, and I was like, "Do they bother you?" He goes,
Okay.
"No, I love them." He didn't care.
Okay, so, oh yeah, there are two more things. The guy that called from Hershey, that's my hometown. If you're still listening, just get in touch with Chef Dwayne Keller. He's like,
Good inside
Cool.
tip.
Dwayne Keller.
There you go.
The guy,
Okay.
the guy from Hershey that called in. If
Yeah,
you're
yeah,
listening,
yeah.
get a hold of Chef Dwayne Keller. I grew up
Okay.
in Hershey, so. And then
Cool.
I
the
love our
last thing I
dog
was
pound.
telling Jeff. Pardon?
No, go
No,
ahead.
I said I love our dog pound because we're helping each other.
What's the last thing you told Jeff?
So yeah, Jeff wanted to know why I was calling in. So I said, look, I have a good idea for some guests. Are you guys ever going to bring some guests on?
I don't know. Maybe, when we run out of everything that's in Scott's brain. How much stuff got
Okay.
left stored in there? Why? What guest you
It's not
got?
just your ideas.
Who do you got?
Well, her name's Julian Mealy, M-E-L-E, and she reached the top of she was on Fox and Friends, but she wasn't political. She left that. She got tired of it.
I don't
She
know her.
got her MBA. She got her MBA at age 38, 39. A lot of things you guys are talking about.
Yeah.
This January, in a couple of days, she's going into the clothing business for women for golf. So that's she ended up there, and
Oh, cool.
Nice.
so.
Maybe we can get
But
Tom
she
off
went
it.
through all these things you talked about, she went through all these things about, should I go back to school? Do I stay in the comfort zone?
Yeah.
Raising capital. So
Yeah,
that's
interesting.
my suggestion.
All right.
Mike, have a great holiday.
Thanks, Mike.
Have a good
Happy
New Year's.
New Year. We'll talk to you next year.
All right, you got it. Happy New Year.
Happy
Thank
New
you.
Year. Let's finish up from the dog pound, then we can.
Sure, let's do the last one. There is
question.
a new index called GEX, SPX 500 Gamma Exposure. It measures the change in delta exposure for options based on changes in the underlying price. How valuable is using this index for trading 0 DTE SPX options?
I mean, first of all, I've never heard of this, so
It's been new since like the summer.
I'm assuming they'll ask you how valuable is it to watch this index to say like how much the SPX is going to move. I'm assuming that's what you're asking. But
So gamma is the rate of change
for your delta.
Yeah, it's the rate of change. So like you said here, it measures the change of delta exposure. This is kind of a new index that
Have you traded it?
No, it doesn't trade.
Oh, it doesn't trade. It's
No.
a price.
That's just price.
Is it CBOE?
It's an S&P index. No, it's not CBOE. I don't think so.
Well, because CBOE has SPX.
I want to say it was not Vanguard, but Van Eck or something like that.
I got to look at this.
I think it's Van Eck. I can't remember exactly who, but it's the S&P 500 gamma exposure, and a lot of people talk about it. Here's my thing with this. It probably can help you in a trending market if you have a longer duration. But on a short duration, intraday on 0 DTEs, I'm going to say it has very little to no value at all. Because remember, the real gamma exposure is not intraday. It's overnight, it's over the weekends, it's over a long holiday like what's coming up now. So this is the kind of thing where it's not very valuable for 0 DTE. It's extremely valuable. Well, I shouldn't say extremely. It's helpful in a trending market. Like for example, if the index is going up and you're thinking of selling premium out 60 days, you might want to hold off a little bit and just wait till later in the day or put your offer in above the market. If you are, if it's going the other way and you're buying premium, you might want to back off a little bit. It's really good about intraday trends and stuff like that. Other than that, on the 0 DTs, I just don't think it has much value.
Yeah, 0 DTEs, clearly they're their own animal, and they can move really quickly, and that's the problem with them. They're, depending obviously if you're buying them or selling them, but it's a very different game trading 0 DTE than it is trading anything with a little longer duration because you just don't have time, and that's the problem. That's why there's 0 DTE. You just don't have time to recover. But I'm gonna have to look at GEX.
Yeah. It's been around. I've answered a bunch of emails on this. I can't remember exactly who put it out, but I think it's Van Eck. I can't remember.
Okay.
Anyway, let's do a little market talk. Wrap everything up.
All right. So
Close it up for the year. Bring everybody back in 2020. Actually, on Monday. We're not going to be doing the show on Friday.
Right. Starting next week, we're back to Monday, Tuesday, Wednesday, Thursday, 9 a.m. Central. Again, we are off tomorrow for the New Year. And we won't be filming on Fridays. So SPOO's down 30, 69.14. Again, not a big sell-off. I'm actually surprised that they are selling off today. NASDAQ is down 129. Gold's down almost 40. Silver's down a little over 6. Bitcoin not really moving, up $50. Ethereum up 24, just under 3,000. And 10-year, I don't think 10-year is ticked. It's 115.25. Maybe
they shut down the bond market for this year.
It's been 24.25. I'm assuming it's 24. Oh no, it's 25.20. Oh, there it is. 25.26. I think the market's locked at 25.26. Again, Meta down 4. Microsoft down 280.
It's the last day of the year. Everybody messes with a few things.
That's right. It's over. I mean, the year's over at this point. So
S&P's up 17% for the year.
Is that what it is?
Just so you know, to be fair, on the last day of 2024, I predicted that the last day of 2025, we would close around 4,900 in the S&Ps.
You were off a little bit. I don't know what my number was.
I take it back. Sorry, 5,200. 5,200. And so we are currently at
69.
So that makes me off by a lot, 30%.
Yeah, it's not bad.
30%.
Well, I'm going to say...
I'm a professional.
Yeah, you are.
I've been doing this my entire life. I'm off by 30%.
I'm going to say
That's
for next year, if we're going to throw predictions out, I'm going to say, under the heading of, like Tom, I've been known to be wrong many times, a minimum of
by the way, your number wasn't that much different.
I don't remember. I don't think I said down
Yes.
at 52. Maybe
You could have been lower. Okay,
Where'd they end last year?
like 5,600, around 56, I think.
I think I was like 55, 56.
Maybe
I think.
56, 5,700. And then in April, we got down to
44.
No,
Yeah.
no. 48, 4,900.
40. Okay, 40.
And then 48, 49, and now we're 2,000 points higher than that. But
I'm going to say down a minimum of 10% for next year.
at one point or close there?
I think we close there. I think they will be down more.
So you think we're going to close at 6,300?
I think we're actually going to be below 6,000, but I'm going to give myself a little wiggle room here.
So where are we going to close next year?
She's calculating.
So I'm going to say, no, I'm going to say, I was thinking similar
Up or
to
down?
Scott, like 62. Down.
Oh, okay. You guys are both bearish. That's not a good sign for me.
Oh, here it comes. Here, don't, what do you say, 8,000?
No,
Yeah, okay.
I think they're going to be down
No,
next year
come
too.
on, they can't be
It hasn't
8,000.
worked betting that they're going to be down, but I think that they're going to be down. I'm going to say next year's a down year. I'm 5 to 7% lower.
5 to 7% is like 3 days.
I know. I know.
Yeah, please.
All right. Well, on that note, thank you for following us from the beginning here, and we're really looking forward to this. We got a lot of things coming out in 2025.
Things.
That's a lot of fun
2026,
stuff.
you see a lot of stuff coming out in 2026.
We
I'm
are
sorry.
doing a prediction marketplace that everybody can participate with. We're building our own digital ecosystem. We're about to launch our software, and we are going to expand the show as much as we can with lots of amazing content for 2026. So tell your friends.
family.
We
Tell
rely
your
on
friends,
you.
tell your family.
If you have any friends, most people that watch us don't have any friends.
What?
And they don't have any family. They've been orphaned. So
It's okay.
that's why they're watching us. But anyway.
Wishing you a very happy new year, safe,
Yes.
healthy, and we will see you. We'll see you back here on Monday morning. So be well.
Happy
In
New
the
Year.
new year. Bye.